The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday to you all. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. The number to use is 877-927-6648. Same number. You can catch my show every day on TFNN from 3 to 4 Eastern. If you can't listen live, no worries. Head over to iTunes. You can pick the show up as a podcast. And a great way to listen to all TFNN programming if you're not at your PC, or you can do it on your smartphone. Just open your smartphone browser, type in tfnn.mobi. Very simple, very easy. You could listen to the stream 24/7, and don't forget about Tiger TV on the homepage of tfnn.com. Channel 1, my show is carried live. It is archived on Channel 13 with Tiger TV. You get the show audio, of course, but you can also look at charts live right along with me. Well, we had a pretty significant day of distribution in the market on Wednesday. Looks like we are going to get another one today. Does that mean this market uptrend is dead in the water and more weakness can be expected? Well, it certainly raises the odds, no doubt about it. Right now, volume on the NASDAQ tracking about 10 to 15% higher than what we saw on Wednesday, which was fairly heavy at 1.94 billion shares. Volume on the New York Stock Exchange tracking same amount, about 10 to 15% higher. Yesterday we had 808 million shares on the New York Stock Exchange. So distribution in the market yesterday, more of it today. Let's take a look at the NASDAQ composite here. It was, 2 days ago, sitting comfortably above its 50-day moving average, and now 2 days of heavy volume selling, and it is not that far away from this key support level here. NASDAQ composite now trading at 31.34, down 0.9% on the day. The 50-day line for the NASDAQ is at 31.05. So you're talking, about 29 points to go before it gets to that 50-day moving average. That's kind of the line in the sand right now for the NASDAQ composite, and for all of the major averages at this point. You can see the S&P 500 still, don't know if I would say comfortably above the 50-day, but much, more above the 50-day moving average than the NASDAQ composite is. S&P 500 right now only down 0.5% on the day to 1504. So the S&P 500 still holding above that 1500 level. Its 50-day moving average is at 1474. So S&P 500, 26, about 30 points to go before it gets down to its 50-day moving average. And we'll take a look at the Dow Jones Industrial Average, also still sitting comfortably above the 50-day line. Really, the tech index, the NASDAQ composite, looks the most vulnerable here. The Dow only down 0.2% today to 13,893. Its 50-day moving average 13,584. So Dow's going to have to go down about another 300 points, a little more than 300 points to get down to its 50-day moving average. Couple of Dow components in the news today. Not a whole lot of movement here. Let's take a look at Coca-Cola. They raised their quarterly dividend by 10% to 28 cents a share from 25.5 cents. Coke actually working on a 4-session winning streak here, up 4 cents today to 37.77. And we also heard from Dow component Walmart before the open. They did report earnings, and a pretty good day for Walmart. The results were, I'd call them lackluster at best, but Buyers are in the stock today. It's up 2.2% to $70.72. Walmart also raised its annual dividend by 18% to $1.88 a share. They made $1.67 a share. That was 10 cents above the consensus estimate and up 11% from a year ago. Sales up 4% to just over $127 billion. The consensus estimate was for sales of 128.8. So it was a sales shortfall. The company forecast profit between $1.11 and $1.16 a share for the current quarter. That was a little bit below the consensus estimate. So sort of a lukewarm outlook from Walmart. Same-store sales at its namesake U.S. business rose 1%. That was a little below the consensus estimate of 1.5%. And finally, in the press release, Walmart said that holiday sales were overall strong in the U.S., but demand slowed late in the quarter, and February sales got off to a slow start. So that kind of jives with that internal email that we got wind of late last week from that Walmart vice president. It said February sales were off to a dismal start. So, I mentioned in yesterday's show the market foundation here clearly is very shaky. You've got a lot of stocks under a tremendous amount of selling pressure, home builders under a lot of pressure, financials under pressure today. We'll get into that in just a little bit, but it's a market where clearly the risk outweighs the reward here. I'm not going to get really concerned until the major averages break below their 50-day moving averages with conviction. They may not. But with the distribution that is kind of built up in the market here, remember, going into today, we had 6 higher volume declines for the NYSE Composite and 3 for the S&P 500 and NASDAQ Composite. So after today, it looks like, unless there's some sort of incredible comeback between now and the close, we'll have 7 on the NYSE and 4 for the S&P 500 and NASDAQ Composite. So that's reason enough to be very defensive here. Certainly don't want to be going out there trying to catch stocks on sale here, because in many cases the selling may just be beginning, especially in some of these top performers that have got really extended in price over the past 5, 6, 7 weeks. So just be careful out there. There's nothing wrong with getting out of the market's way here and just kind of watching from the sidelines and just waiting to see how this selling eventually shakes out. Interesting news around Apple today. Let's take a look at Apple. It's got quite a losing streak going here. I think it is on pace to extend losses for 7 days in a row here. So Apple right now down 76 cents. It is trading near its session high. Last trading at 448.09. Apple does have a shareholder meeting coming up at the end of the month. I want to say February 27th, but it's just towards the end of February. David Einhorn had a conference call today, just kind of making his case what Apple should do with its $130 billion cash position. Remember, more than half of that money is overseas, so it's not like Apple can take all of that $130 billion and just say, okay, let's do this and this and this with it. But Einhorn very vocal that Apple should be doing something with a big cash position. He's, among other things, he said in the conference call that Apple could unlock $75 a share with an ongoing share buyback program. He talked about an $89 a share one-time dividend. So David Einhorn pretty vocal about what he wants to see done. Also initially talked about a preferred stock that maybe yields something around 4%. It makes sense to me, but we'll see. I think there's a pretty good chance that Apple will hear something either before the shareholder meeting or during the shareholder meeting. I think Apple realizes that public perception here, that they need to do something, and so we'll see what eventually comes of it. I mentioned the financials today under quite a bit of pressure. Let's take a look at the Financial Select Sector Spider Fund. Down 2 days in a row, pretty sharp, but this is an example of what an extended ETF looks like. It has not been, it broke out in early January, gap up in price, just ran higher, no consolidation, and you can see it's still holding above its 50-day moving average here, but underselling pressure for 2 days in a row. Some other financial names under pressure today. Let's take a look at Goldman Sachs. Same situation, very extended. Question is, will it find support at its 50-day moving average, or will it not? Just want to take a look at Goldman with the 10-day, 20-day, and 50-day moving average. You can see Goldman just barely sitting above its 20-day moving average. Its 50-day line is down at around 139. Thereabouts. 139 would be key support for Goldman Sachs, and would find the same thing for JP Morgan here as well. So JP Morgan, Goldman Sachs, some of the two better performing financials out there. JP Morgan still holding above its 20-day moving average, last trading at 48.32. Its 50-day line is at 40. Some of the asset managers doing very well in this market, under selling pressure as well. Remember, a few weeks ago we had Keir McDonough on from Brigos Capital Management talking about BlackRock. Possibly we'll get another opportunity to buy into this stock, but it'll be predicated on what the base looks like. All these financials look like they're ready to kind of base and take a breather after the monstrous gains they've enjoyed since December. It's time that they base and consolidate gains. So that process could take a few weeks. It could take 5 or 6 weeks. It could even take longer. But if the last thing, if you want to buy the financials, what you don't want to see is, you don't want to see this market start to race higher again and not give the financials enough time to consolidate gains. So BlackRock down 1.2% today to 236.19. And then I also wanted to show you another lesser known asset manager that is probably going to see lower prices from here, Apollo Global Management. And let's go ahead and take a look at a weekly chart for APO, because the price action recently tells me that this stock is ready to consolidate. You can see a big reversal off its high, very, very extended after a recent breakout over 14. 10-week moving average at 1950 could be a support level if it's a very strong stock, which it is. It could find support there. So bottom line, the financials just need to consolidate for a period of time. Listening to David White's show, had a call late in the day on 3D Systems. Big break below the 50-day moving average here today with some volume. This is what distribution looks like in a stock. You can see these big red volume bars here. Definitely the stock facing some institutional selling pressure. As David mentioned, a good quality company, good product, good fundamentals, good growth prospects, all of that. But it's definitely a stock that did get ahead of itself. Does look like it's ready to base and consolidate gains as well. So but be careful about trying to catch a falling knife here. 3D Systems, early February, $67, $70 stock. Now it's at $54.58. Got to let this consolidate. Got to let it take a breather. Perhaps down the line you'll get a new opportunity to buy it, but it is way too early right now. Headed into break number 1, Breakout Investing on TFNN, folks. Stick with me. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
All right, deviant little market here. Dow Jones Industrial Average only down 29 points. Nice little comeback by the blue chip index, down 0.2% to 13,898. Tech stocks trying to come back a little bit, only down 27.5 points. Not much of a comeback, but off its lows, down about 0.9% to 3136, and the S&P 500 down almost 7 points, 0.5% to 1505. Big move in King Dollar today. Again, up, U.S. dollar index up 0.5%. to 81.48. 81.48. Let's take a look at that U.S. dollar index. I like doing that on the show. You did have a breakout in the greenback index earlier this week, and it started with a breakout over a descending trend line, and yesterday the dollar index closed above its 200-day moving average at 81.07. Its 200-day line was at 80.92, and it is making more progress today. Like I said, greenback index up about 0.5% to 81.48. April gold today up 60 cents. Several days down in a row for gold, but snapped its winning streak today. So April gold up 60 cents, settles at $1,578.60 an ounce. April crude oil down $2.38. Crude oil under a lot of pressure. Another 2.5% decline today, settles at $92.84 a barrel. Money flowing into bonds, that is making yields Head lower, 10-year note down to 1.98%, having a problem holding on to that 2% level. 30-year bond down to 3.17%. Some other big decliners today. I mentioned 3D Systems. 3D Systems is reporting earnings on Monday, so maybe a little bit of trepidation ahead of what its earnings report is going to look like Monday. Another strong quarter of growth is expected, but again, a lot of good news got priced in very quickly in these 3D printing firms. Let's take a look at URI. Last check, a fairly bearish session taking place. You had a big reversal in United Rentals yesterday in heavy volume even heavier today. So you can see how a lot of these leading growth stocks seem intent, just like the NASDAQ really, on testing their 50-day moving averages here. You can see the daily chart for URI showing that exact same action. Very extended stock here, headed into Wednesday. Yesterday, when it reversed in heavy volume, shares are down another 4% today to 50.96. Outstanding fundamentals at URI. They provide construction, industrial equipment rentals. And how about lumber liquidators? Lumber liquidators tried to fend off the sellers yesterday. It actually closed higher, but it reversed and finished near its session low, managed a small gain. It reported pretty good earnings, but look at the movement in the stock today. Just amazing volatility here. Down 5.9% currently to 58.89. Its 50-day moving average is at 55.83. So trading in the bottom half of its range. Wild, erratic price action in lumber liquidators. Normally don't like to see spreads that wide. I mean, this is a stock that hit a high today of 63 and a low of 56.67. So a trading range of intraday high and low of more than 6 points today for lumber liquidators. And the biggest decliner today, or one of them, has to be Verifone Systems. This is a provider of point-of-sale electronic payment processing devices. You swipe your card at a retailer, supermarket. Likely it's a Verifone machine. This thing just absolutely got destroyed today. It's pretty incredible to see. Down $13.84. That's a 43% decline in one day. Last trading at 18.05. They pre-announced earnings that were very disappointing. They also forecast profit and sales in the current quarter below estimates. So big problems for Verifone Systems today. Paper stocks going kind of crazy today, bucking the trend. I don't really follow the paper stocks very much, but noticed a lot of them rising in heavy volume. Here's a look at Clearwater Paper, ticker CLW, up 6.2% today. Pretty good volume to 48.86. We did get earnings from Clearwater. Earnings up 53% to 84 cents a share. Sales, that was better than expected. Sales a little worse than expected, down 1% to 462.7 million. But investors overall like the results. Check in on a couple of other paper stocks doing well today. Rock 10, RKT, up 5% to 83.54. And finally, PKG, Packaging Corporation of America, up 5% to 41.24. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Let's head east to Beantown, talk to Shu. How you doing, Shu?
Hi, Ken. How are you?
Pretty good.
Question for you on a Facebook. I sold the cover calls, and
okay.
I'm up already 40% on it. What do you think? Stay with it, and or get out of it now?
Well, technically, it's. This is a weak stock right now. I don't like the fact that it recently fell below its 50-day moving average. Tried to rally back earlier this week. We are in a pretty unhealthy market here where sentiment has turned pretty negative to tech. So Facebook's technical picture right here is not looking all that hot. It's underperforming again today, down 3.6% to 27.43. So I'm currently long this stock. We got in back in December when it broke out over 28. It ran to 32. thought that it was going to be able to hold the 50-day moving average. So, our stop here is, right in that 26.75, 27 thereabouts. And I'd like to think we're going to be able to hold on to this, and it's going to be able to, hold on to that February 12th low of 27.10. But the way it's trading, it may not. So we've got a tight stop set here. So I can't give Facebook a ringing endorsement here. It's been trading pretty poorly lately.
Well, my thought is on options cover call that I have. Just stay with it.
Well, and this is a trade then. I mean, if it continues lower, you're going to be doing pretty well. Is that the thinking here? I'm not.
I heard long one like June 32.
Okay, so I don't really follow I'm not an options guy, so some of these option strategies I'm not entirely up on. But I mean, if you're up on an option trade here, up significantly because of Facebook's price weakness, I don't think there's any reason not to abandon that trade, for now.
I see. But if it continues to go another like a point or two lower, then pretty much call options good. Stay on it. Do you think this could go further down?
Well, yeah, because I think I do think that, and like I said, I'm kind of clinging on here. I mean, we're in this at around a little over 28. So at 27.43, we don't have a we don't have a big loss, and we're just kind of keeping it on a tight leash. But its technical picture looks pretty weak here, where I wouldn't be surprised to see it take out that low on again, that February 12th low of 27.10. If it does that, then I'm gonna exit the long position. But so we'll see how it goes.
Okay, thank you.
Okay, Shu, thanks for the call.
Bye.
Yeah, so the covered, I say he's up a fair amount on some sort of covered call that he had here. So the best way I can answer it is I think Facebook is looking like many other tech stocks here pretty weak. Resistance at the 50-day moving average earlier this week is never a good sign, and again, the stock is underperforming materially today. So for the Ultimate Growth Stocks model portfolio, we've been taking profits in select names. In other cases, just keeping losses small. Not interested in seeing a 3 to 4% loss, potentially get to 7, 8, 9, 10%, or potentially even worse. So this is sort of a capital preservation market right now, where it's just not going to do you any good to watch small losses get bigger. And if you do have some profits built up over the past several weeks, not a bad idea at all to take some money off the table, if not full profits here. Checking on shares of Google. Google's been in the news here, according to a report in the Wall Street Journal. The company is developing a touchscreen laptop using its Chrome operating system. It's going to take on that Microsoft Surface tablet head-on. Google refreshed its line of laptops last year with some lower priced models. There's an Acer model that goes for $199 and a Samsung model for $249. And then there was this video that came out, I think it was yesterday, about these kind of glasses, these glasses that Google's making called Google Glass, with basically an eye-level computer display. Glasses also have a video camera, not expected to hit the market until at least 2014, but I think I read that it's going to retail for under $1,500. These wearable, these glasses that basically are computers. They look pretty good. Interesting concept. We'll see how that goes. We did have some economic data today. Weekly jobless claims up 20,000 last week to 362,000, mostly in line with expectations. Consumer price index today overall flat. That was a little better than expected. Estimate was for prices to be up 0.1%. The core rate a little hotter than expected, similar to the PPI yesterday, where the core rate came in a little hotter than expected. Core consumer prices up 0.3%, a little bit higher than the estimate for 0.2%. And also housing data. Existing home sales up slightly to 4.92 million units from a downwardly revised 4.9 million in December. So mostly in line. Economists were expecting existing home sales to be flat at 4.94 million units. Mentioned the home builders yesterday. Boy, did they take it on the chin pretty hard. Let's see what's going on with the home builders today. Take a look at this liquid ETF, the Dow Jones U.S. Home Construction Index Fund. Hits an intraday low of 2160. Has rallied back up near its session high, only up a penny to 22, still sitting underneath its 50-day moving average at 22.14. And some of these high-quality home builders that really took hits yesterday, we'll see that they're trading up near session highs after early weakness. Ryland Group up a little more than 1% to 34.65. Big break below the 50-day moving average yesterday. And check in on Lennar. All these home builders showing very similar price action today, up near session highs after early weakness. Lennar up 1.3% to 37.68. Last piece of economic data that we got today was very disappointing from the Philly Fed. This is a regional manufacturing survey. Came in at minus 12.5, so contraction in spades. The estimate was for a reading of 1.5, so not a good reading at all from the Philly Fed Regional Manufacturing Survey. Take a look at some earnings reports today. There were a lot of them. You know, we are at the tail end of fourth quarter earnings season, but it is going to be very busy over the next couple of weeks. We still have quite a few companies on tap to report. A big reversal in shares of Boston Beer. Yesterday, it is down another 1.8% today to 150.13. So-so results at the maker of Sam Adams Beer. Profit of $1.25 a share was in line, up 7% from a year ago. Sales up 8% to $153 million. The estimate was for $152.5 million. Read today that Boston Beer is experimenting and working on selling their beer in a can. Up until this point, you can only buy Sam Adams products in a bottle. So apparently they have this can they've been working on that is pretty interesting. Let's take a look at LifeLock, LOCK. LifeLock IPO last year in October at $9 a share. Nice move for the stock today. Very nice earnings. Company provides identity theft services. They made 10 cents a share, 3 cents better than the consensus estimate. That was up 11% from a year ago. Sales up 49% to $78.8 million. That was more than $5 million above the consensus estimate. So shares of LifeLock up 5.7% today to $10.89. Another stock that is extended. You can see the breakout here in January for LifeLock. Again, a lot of the big breakouts occurred January 2nd, maybe a week or two after that is when a lot of stocks started moving. Definitely LifeLock was in that boat. You can see the big move, heavy volume move here, and it never looked back. So another extended stock out there. You don't want to chase it at current levels, but wait for a new base to form. And interesting company that continues to report pretty strong growth. Tesla Motors takes a big hit today. Gaps below its 50-day moving average. You can see it's an area where it did find support in the past. Stock is down 9.1% today to 35.03. Luxury electric car maker. They lost 65 cents a share. That was more than the 53 cent a share loss it was expected. The company blamed the loss due to higher costs during the production start for the company's Model S sedan. Big jump in sales. They started selling cars. Sales up 678% from a year ago to $306.3 million. That was a little bit better than the consensus estimate for $298.9 million. Interesting company here, TTS. Tile Shop Holdings, a company that is a specialty retailer of manufactured and natural stone tiles. So you've got lumber liquidators reporting consistent earnings growth. They, cater to the housing market. They sell hardwood flooring. Tile Shop Holdings, homeowners go in and buy their natural stone tiles, doing some work around the house. They've been reporting pretty nice numbers. This time around, they lost 84 cents a share, but sales were up 23% to 46.2 million. Same-store sales, impressive jump, up 9.8%. The company ended 2012 with 68 stores in 22 states. That's 28% year-over-year unit growth. So Tile Shop Holdings today only down 4 cents to 17.86, still holding its 50-day moving average here at 17.10. So interesting company. And then Del Frisco's Restaurant Group, IPO last year in July at $13 a share. It is now trading around 18. It's up 2.1% on the day. Big intraday price swing here as well. Restaurant stock, their sales were up 13% to $80.9 million, a little better than expected. Earnings down 3% from a year ago to 33 cents a share, but that was 4 cents better than the consensus estimate. Same-store sales up 2.7% in the fourth quarter, a little bit slower than the 9.5% increase in same-store sales in the fourth quarter of 2011. Company said it estimated it lost about $1.1 million in revenue as a result of Hurricane Sandy. So it looks like investors giving the stock a little bit of a break. And again, you had a nice breakout here recently over 1650. Stock's now trading at 18, so continues to show relative price strength. Take a look at IMAX as well. IMAX is the symbol here. Earnings up 64% to 23 cents a share. Another nice breakout here. You see a base that started forming in late October. It broke out, didn't get very far, started to consolidate again, and then you had a breakout earlier this month over 24.50. It's now 26.37, so a little bit extended, but the stock is up 4.7% today to 26.37. The results helped by basically theater network growth. They operate these high-tech theaters. Very cool to see movies in an IMAX theater. So they basically design these theater systems and then they sell or lease them to customers under revenue-sharing arrangements. So they beat the consensus estimate by 7 cents a share. Sales also better than expected at $77.8 million. That was up 17% from a year ago. Let's check in as well with Intuitive Surgical. ISRG. The stock had a very rough day yesterday. It has bounced back after hitting an intraday low of 546.76. Stock is now trading at 562.54, up 1% on the day. Remember, yesterday the Journal of the American Medical Association published a study that shows the use of robotic surgeries in performing hysterectomies. That's one thing the Da Vinci surgical system does that ISRG makes. It actually added to the cost of the surgery by a third, but still held the same risks. So ISRG looking a little vulnerable, but recovering nicely after early weakness today, up 1% to 562.54. We'll check in on the markets one more time, folks, when we get back. Stick with me. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Let's check in on the major averages here as we head into the close on this shortened week of trading. Right now, the Dow down 53.5 points, 0.4% to 13,874. Underneath its 20-day moving average, another 2% ago, 2% or so will bring the Dow down to a key support level. Its 50-day moving average. That's the green line right here. Let's check in on the S&P 500. We'll see the benchmark index also below its 20-day moving average. Same for the S&P, another 2% or so for it to get down to the 50-day moving average, which is at 1473. Right now, the S&P down close to 10 points to 1502, so trying to hold that 1500 level. And finally, the NASDAQ Composite sitting very close to its 50-day moving average here. It is down 1% today to 31.31. Its 50-day line is at 31.05. So, what, about 26 points. So, tech stocks in a little bit of trouble here. It's possible we could see a bounce for the NASDAQ. The concern I have is that the markets since mid-November are up, 12, 13%, something like that. Right now, you're looking at a pullback of maybe 3% or so off of the recent highs, which does not seem like a lot after a 13% move. To me, this looks like a market that is in dire need of consolidation, and when you get that consolidation is when you get the new bases forming. Some stocks are going to pull back less than others. Some stocks are going to pull back 25, 30% off their highs. Others are going to pull back 5 or 10% off their highs. But some base building needs to be done here. And I've been saying that for a while now, just with all the extended stocks out there, very little in the way to buy. The market was kind of telling you to keep your powder dry here. Don't chase. So we'll see. We'll see what coming days have in store. But it does look like we're going to get another distribution day today, which is basically a meaningful percentage decline in higher volume than the prior session. We saw one yesterday. We are likely going to get one today as well. So that would leave us with 4 higher volume declines for the NASDAQ Composite and 4 for the S&P 500 as well. I don't think this rally is going to be completely killed until the indexes break through the 50-day moving average with conviction. It may not happen, or it might happen. Let's just wait and see how things play out. What you don't want to be doing right now is buying stocks, because there are enough yellow flags out there to just kind of sit on the sidelines and just kind of watch and see how things play out. We've definitely moved to a defensive posture with the Ultimate Growth Stocks model portfolio. Only have 4 names right now, still sitting on some profits in some names, and we'll just see. We'll see what the coming days look like. If you want to check out 30 days free of Ultimate Growth Stocks, my daily reminder, you can do that right on the homepage of TFNN.com. Just click on the Newsletters tab and then Investment Newsletters, and you can test drive the letter 30 days, no obligation. Coming up after the close, let's take a look at Aruba Networks, ARUN. We're going to be hearing from this company, which is a provider of network access solutions for mobile enterprises. Stock under a lot of pressure over the past couple of days, below its 50-day moving average, down another 2.4% today to 2079. So look for earnings from Aruba Networks. Also after the close, Bloomin' Brands, BLMN, restaurant change, Newmont Mining, Hewlett Packard, also out with results after the close. Nordstrom and Flowserve, FLS. Coming up next, the Tom O'Brien Show. See you back here tomorrow to end the week, Friday, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day, folks.